Well, good evening, ladies and gentlemen, and thank you for being with me for this Danielcode webinar. And I see that amongst all our friends who are here is Mickey D, who saved me from answering the question, can you hear me? How about that, old mate? Are you swanning around Europe still, or Asia, or have you returned back to the great country? Mick's been traveling. Wonderful. Very good. Okay. We better catch up, mate. We better catch up. Back on deck. There he is. He's back to do some honest day's work. Okay, plenty of people with us today, of course, and always interesting to see some old faces returning. Florian, haven't seen you for years and years, my friend. It's so good that you've been able to join us. Greg Palladini, of course, wouldn't be a webinar without Greg, and he has been so generous to all of you with, if you go to the forum, click on Danielcode trading tutorial link, you'll see Greg, who came back a couple of years ago to do his second tutorial. Did the first one in 2016 in Los Angeles, and he did another tutorial just to learn about trading time. And he's an absolute super good trader, and very, very interested in trading time. It absolutely changes your view on life, really. Anyway, it's good to have you with us, Greg, of course. Greg, the other Greg over in Texas or Colorado Springs, not sure which. He's a man who moves about a bit, but good to have you with us, Greg. Gig's with us from North Carolina. He's a great man for the golf. Here we are, lots of them coming in. George, lots of people coming in now. Let me see where we are here. Okay. Lots of Peter, lots of, and Jan's with us. Jan, lovely to have you with us. And let's keep going down here. We've got a whole lot to talk about today, folks. A lot of money this week. A lot of money. Very good. Harold, my friend up in Redding, California. Grand to have you with us. And I'm going to be talking a lot about gold today, so you're going to be really interested in that. Harold is a serious gold bug and a wonderful person. Jan, wonderful to have you with us. Justin, been a while. Glad you're with us. My regards to Dad. Leo's with us. Leo, thank you for being with us. I'm going to use a couple of your short-term trading charts today. To show folks how to do it. Mark L, he's the original, wouldn't be a tutorial without a webinar without Mark here. He's a wonderful man, tutorial guy, been with us for a long time. Here we are, Mickey D, of course. Miles, good to have you. Milton, good to have you with us. Nathan down in South Australia. Norbert up in that cold country in Canada. Grand to have you with us, Norbert. Peter Mack, who's not a day trader. Plenty of other Peters, Petro as well. Rolf down in Melbourne. Good to have you with us. Been a while. Sanjay, glad to have you with us. Here we are. Oh, Steve. Yeah, good to have you with us, Steve. Many Steves. Many Steves, in fact. And let's see where we are. I'll try and get through these. Toddy, he's South Carolina, South California guy, tutorial guy, great friend of mine. And of course, Vicky, glad to have you with us, Vicky. And Bill, good to have you with us, Bill. Here we are. What's happening here with Michael? Mickey D, the Prophet Daniel, painted by Michelangelo, on the Sistine Chapel ceiling in Vatican Palace, was amazing. Only 15 minutes allowed to view. Yeah, it's awesome, isn't it? Absolutely awesome. And Anthony D.D., who used to be a broker, is now a private trader in Chicago, is with us, just arrived. Grand to have you with us, of course. And let's move along. Okay, so a huge week and wonderful trading. You remember that markets are rational, orderly, and sometimes predictable. And the business of trading futures and forex is not to be right. It is the business of making money. Of course, if you're right, that's a good start to get that way. Keep going. Now, markets are your friend. I know a lot of you are frightened of markets. Don't be. Their sole purpose is actually to give you health, wealth, and happiness. But to acquire all those things, you need to be trained. And quite simply, you're either trained or untrained. And if you are untrained, shoot me an email. I'll be happy to teach you everything worth knowing about futures market and Forex. So what makes markets turn? Well, there's a number of things. First of all, it's time. When time cycles expire, we expect markets to give us a change in trend. Then there's price. When we get target recognition together with one or two other little requirements, you'll get a turn. There's also correlations. When markets are correlated, including gold and the US dollar, which I'm going to talk about today, they are inversely correlated traditionally for the bulk of the year and over many years. Gold and the US dollar index have been in an inverse relationship, meaning as gold goes up or US dollar goes up, gold goes down. Dollar goes down, gold goes up. So they're the main things there, but we've had a different wrinkle on it this time, and those of you who have been following the Danielcode trade signals will be sitting on 14,700 or thereabouts for one contract in gold at today's close, and you also had the rundown into that low, and that was about bit less than $11,500 running down. So 11.5 down, almost 15 running up. I've been trading gold on the Danielcode. Has been a thing of great beauty, indeed. Okay, so they're the main reasons markets will turn, and markets are affected by a number of competing time cycles. Once it's become dominant, it retains that position for a long time, much longer than you may envisage. For those of you who haven't been with us when we were earlier talking about major time cycles, all of these time cycles, including the all-time high and the low in this cycle, and more importantly, the COVID flash crash and its cousin 29 days before that, have all come on the 59 cycle. The only cycles that are present, big cycles that are present in financial markets at the moment, that's gold, S&P, whatever else you like, are the 59, remember the half of that is 29, and the 70 occasionally, and the half of 70 is 35. And we last saw that at the 2022 high, so that is still running along and has been running along since 1957. So these cycles, once they, and I'm talking about the major cycles now, not the ones we use for daily trading, these major cycles, once they lock on, they stay locked on for a very, very long time, much longer than you could imagine. And the commonality of time cycles is that markets reverse when the dominant time cycle expires. And just to brush that up, a valid Danielcode time or price signal is so important that a failure of that signal creates a new entry. Every Danielcode time or price signal has an entry point and a failure point. And the failure point's where the stop loss is. If that's taken out, that's because these Danielcode signals are so powerful. If the failure point is taken out, that is a requirement to have a new entry right there. If that happens on the same day as a new position, what you get is an outside bar. If it happens after that or within 3 days, it's what we call a flip me signal. And I notice there are quite a number of our markets that we cover are looking like they're about to elect a flip me signal. So make sure you're aware what I mean by that. If not, go through some of our previous webinars, just the ones this year. And you'll see about flip me. Very important to know that. Okay, so Daniel's code is pretty simple. It is only 15 lines. It's written, it's writing. It gives us 2 numbers, and it gives us the sequence of how time advances. And that is time, times, and a half. And it sounds simple, but it's a little bit more complex than that. Because is it 1 time, 2 times, and 1/2? Or is it time and a half to make times? Is it then times and a half to make 3 times? So All of those sort of issues we have answers to because we deal with them every day. But it's simple mathematics applied to these two numbers, 1290 and 1335. And there's a lot of interest in those numbers, particularly around the charismatic churches that are interested in end-time prophecy. It's a huge deal for some people, not me. There are some things we're not meant to know. But it's those same two numbers. They have a 5 as a common fractal. You should be thinking about why that would be so. And Daniel's code talks about time in days. Now, remember, what is a day? A day is one complete rotation of the Earth on its own axis. That's a day. And for the Earth to do that, it's turning through 360 degrees. 360 degrees is one complete rotation. So think about time in terms of days, but also think about time in terms of degrees. So these numbers combine with some pretty basic math to give us 29.6, and that's the number we call time. That's Danielcode time. It's not necessarily the only measure of time, but it's a measure of time which we adopt as Danielcode time because it comes straight from the source code. The other number that it creates for us is 365. I'm sorry to break up this, folks. Just give me one moment, would you please? My apologies. Dogs. There you are. Anyway, those numbers combine to give us these two basic numbers, 29.6, which we call time, and 365.37, which is 2 hours off a perfect calendar year. Now, how these numbers are appearing from something written 2,500 years ago is really one of the great mysteries of life. And if you want to, you can say that you don't like to know anything about the Danielcode, but you'll be a pure scientist and you will take the length of a synodic month as your basic measurement of time. And a synodic month basically is an average length of a calendar month. So, we have 28 days, 29 days, 30, 31 days in our month sometime. But a synodic month, the average of a synodic month is 29.5 days. The Danielcode number is 29.6 days, 1/10 of 1% difference. But in fact, there's no difference because if you look at this table, which I think is from Encyclopedia Britannia, and it looks at the length of synodic months in 2001, and you can see that a synodic month actually runs from 29.3 up to 29.7. They vary quite dramatically during the year for the usual reason that the planets that are being creating the synodic month, which is basically synodic month starts counting when the Earth and the Moon and the Sun are in a particular alignment, and once they return to that alignment again exactly, that's called a synodic month. So, but in that process of moving out of the alignment and then going back into it, two at least of these objects, the Earth and the Moon, are on orbit. They're not circular orbits, and they're not particularly neat and tidy out at the apogees and the perigees. So 29.5 for the average of the synodic month, 29.6 for Danielcode, no difference between them. You can take either of them and you'll be quite safe, I assure you. So we have 29.6 is Danielcode time. That means 59.3 is time, is the plural of, and 14.8 is a half. And these numbers create all of the Danielcode time cycles. And to the best of my knowledge, these ratios and 70 are the only cycles present in modern day financial markets. And the wonderful thing is most people don't know what I'm even talking about. And whenever you know something that the rest of the world doesn't, you have a huge advantage. So let's start looking at this search for gold, which is in such a tremendous trade we're in at the moment. And you can see that there's some reasons for it. The low of this current situation with gold, and we're looking at a very long-term chart here. This is a 24-day chart. It's the Danielcode equivalent of a monthly chart, if you like, but all our charts are based on a multiple of 6. This is 4 of them, 24 days to each bar. Each bar is made up of 24 trading days. Have a look how beautifully that low came in last month, and it's absolutely perfectly sitting on twice 59, which is 118, from the high before the high. I spoke about this at our last webinar. The high before the high and the low before the low are the prime measuring points for time cycles. Okay, so this is a high before the high that we've started this cycle on, and you get it bang twice 59 right where you want it. So as well as that, the half cycle is active as well, and half of 59 is 29. 29.6 gives you 59.3. And the reason we don't have to worry about these decimal points is that we've got 104, two weekends, a weekend at 52. You've got 104 days missing because of the weekend, and another 13, it might be 14 now, days missing for market holidays. So essentially what we're doing, don't forget that the markets are running all the time. It might be a weekend, but the market is still running. It's still working internally, and we have to account for that. And what in fact happens is that the ratios are always there. They keep working. Have a look at this little fella here. This is the high before the high at the top, near the top of the page on the left. That's where we started our 59 count from just now. This is the half cycle. This is the 29 cycle, and it started from a high before the high as well. And look what it's given you. It's given you the low from the 2020 high. It's given you the next high after the August 2020 high. And now it's given you the low right where last month was. And that's part why gold is having such a big push up. And keep that in mind as we move on to the other reason, which is a bit more cunning. This, folks, is what I call the Super 6-day chart for gold. We are doing these charts now for gold, S&P, crude oil, and T-bonds. And if you are a subscriber to Website Pro, that's the $4.99 a month one, let me know. I'll be happy to send these to you as they're created, which is weekends and on Wednesday evening. We'll get them right into the website when Terry gets a bit of time. He's a bit under the weather with things to do at the moment. He's a very busy man, but once he gets a bit of a chance, we'll be able to put these weekly charts straight into the website. But for now, if you're a Website Pro subscriber and you'd like to have them, send me an email, jneedham@thedanielcode.com, and I will email them out to you as they're created on the weekend and on Wednesday evening. But have a look at this for gold. See that perfect target recognition at the low. I talk about it all the time. It probably drives you mad, but it is the essence of the whole Danielcode. It's why the Danielcode is so different. Almost perfect Danielcode target recognition that low, about 2 points variance is all. Now remember, this is a 6-day chart, and if we allow 0.1% for a daily chart, we should be allowing a multiple of that for a 6-day chart. That's absolute perfect target recognition at the blue line. Turns itself around, retest that line. That's why you got the small outside bar part there at the bottom, and whoosh-o, off she's gone. And as I said, 14,700 per one trade on this upside trade for the moment. Okay, let's have a look at this. This is, you've seen it before. If you haven't, this is a chart of gold, and it's for 2 years and about 8 months. It's almost 3 years of data, not quite. And what we've done with this, I've simply put through it a 29-day cycle, 29-day time cycle. What you can see is that every important high and every important low in this market for the last almost 3 years has come at one of these Danielcode time cycles. Now, 29 is a major time cycle, not one we would usually use for our analysis, but it demonstrates so perfectly how markets are completely controlled by these ratios. Every high, every low has come at a 29-day ratio cycle. Okay? Sometimes you're getting 2 buys, one after the other, without the sell in the middle. That's because if you wanted to trade this, and we have people who actually trade this 29-day bars, 29-day cycles, the daily bars, of course, you would have a shorter time cycle for the counter trend. But it's staggering. Gold is one of the most complex markets that we cover. You don't expect to see anything like this. Every high, every low, all on a 29 cycle. Is this just for the last 2.5+ years? No, I've taken this back. Oh, years and years and years. It does the same thing all the time. Interestingly, have a look at the last time signal, 29-day cycle to buy. It's right at the low of our present run-up. That's the other reason why gold is so strong at the moment. And there's a third reason as well. And it's not what the gold bullion dealers tell you. They're rushing to say it's global panic. It's a flight to safety in gold because of what's happening so tragically over in Israel. Well, it may be, but that's actually not why it is, because have a look at this chart. This was the rundown in the short trade that we had from the TO3 sell signal right to the top of this chart, and it went pretty well straight down, and this chart ended on the day we were showing $11,230 per one contract, and all 3 of the previous bars, not counting the inside bar, had given us target recognition. So the very next day after this chart gave us the turn, and you won't be surprised to hear that, given what this market's been doing, ticking off its target recognition, ticking it off, accurate to 0.1% of price, not 1%, 1/10 of 1%. That's how tough we make it for this tool to talk to us and tell us what it's doing. And markets are talking to you. Markets are trying to talk to you all the time. The problem has been that until Danielcode, we didn't have the language of markets. Now we do. And we can see markets just going down, tipping off one after the other of these Danielcode ratios. And what the market is doing, it's saying to you, I know these numbers and I'm tracking them. And you expect that to happen at least once every 3 bars. More commonly, it's every 2 bars, sometimes like this little rundown here, it's every day. If you don't get the market talking to you within 3 days, it's gone silent, it's really saying to you, not these ratios, try another ratio. Okay? Don't fret yourself too much about that. I'll be happy to talk more about it in the future. It's a wonderful, wonderful thing. So here's this gold trade, 13,700 when I filled out, when I opened the page for this last night. And today, of course, it's now 14,670 per one contract, or thereabouts. Decent trade, isn't it? Remember what I just showed you. We made 11.5 to 12,000 in the short side with this market running down into its low. And right at its low, you can see 1 bar after the inside bar there. Perfect target recognition, which it's been doing all the way down. And that bar as well, that set up a TO3 and our 6S buy signal. And it's been straight up since then. And quite frankly, I can't remember a bigger move than this without a one-day counter trend. it's been marvelous. So you've had a whole lot of things happening. You've had the long-term time cycle causing the turn. You've had the movement with the US dollar, which we're going to go into next, about the turn. And we've had the target recognition on the Danielcode numbers as it's moved through them. So if you like that, think about taking the Danielcode trading tutorial. I will teach you everything that you see me do at these webinars. I don't hold back anything. I teach you the lot. Okay, the next way that we can get a turn is caused by price. And Danielcode takes the same time cycles we've discussed and it turns them into price targets. And it doesn't do anything else to them. It simply takes the ratios, which in time are working vertically up and down your page, and it takes those same ratios and slaps them on the chart as price, now working horizontally. And if you go to Chart Archives, there's over 40,000 members charts there that I've created over the years and given to members. And you will be very hard pressed to find a market that's ever turned anywhere without target recognition. And this concept of target recognition is how price shows you that the market is locked on and recognizes that number. If we have target recognition, which I've said is very hard to do for the market, if we have that, that doesn't mean that we're going to get a turn automatically, because there are a few other things have to fit into place. But if we change that comment around from the negative to the positive, what we can say is that absent target recognition, the market will not turn. Okay, so that's a big statement. You should always qualify them. There will always be an outlier. But essentially, you can go back through the 20-odd thousand members charts that I've created, and you won't find a market that's turned unless it's already had target recognition. And target recognition is valid for 2, sometimes 3 days. So it's not just the ultimate bar you're looking at. So all of these numbers that you see on the members charts here, I don't actually create them. What I do is I simply feed in the ratios to the tool, and it's the market itself that creates all these numbers, because they're all a fractal of a previous range. And that's what markets do all the time. And when you see them do it, it meets target recognition. It's done it within 0.1% of that price target. That tells you that you're in line. You're now valid for a turn. Without that, absent that, it's down in the 2 to 4% whether you'll get a turn. Okay. This is the S&P. This is price. This is the 24-day chart. Look what's happened with this rally, and look at these time cycles. They're running March 2020. That's the COVID flash crash. Remember, the shortest bear market of all time. It was 24 and maybe 28 days. Wonderful trading. I think it was 28 days, and we made 24,000. It might have been the other way around. And the prior one as well, you can see the October 2018 high. That was identified on a 59 cycle from the 2017 high into the 2019 crash low. It's on a 59 cycle from the high. The COVID flash crash came on a 59 cycle from the low, actually 2 of them, 2 lots of 59 for both of them. These are now the new bulwarks for time. I believe that they will be controlling time, although I think I might even have a chart to show you that shows that the old cycles running from the 2007 high to the 2009 low are still running. But have a look at this. You can see the 29 found the low perfectly, and we've had the rally. Look how it's observed price. Target recognition at 42.76. Target recognition at 44.70. That's valid for at least 2 days, sometimes 3. You got one more bar after you had target recognition, turned around and started to go down. Not with much enthusiasm, I might add. So This is what that gold chart looked like, and I might have shown this to you already. On the 5th of October was the date that we found the end of this trade. There's one more day to go, which created the buy signal, which has triggered us into this huge, massive up trade now. Remember, target recognition always precedes a turn. Find target recognition and you can track it into the turn. But target recognition accurate to that 0.1% always precedes a turn. Now, tomorrow the market will make a liar out of me, but it doesn't, folks. It's just such a high correlation. It's absurd. Have a look at this on a gold chart. This is a chart that I use for teaching purposes. It's back in 2015, and I use it because it's got all the nasties in it. Most of the things that can go wrong, go wrong. Have a look just at this chart briefly. There's nothing too dramatic about it other than to say there are 14 bars where the stochastic, it's just a standard 533 stochastic. There are 14 bars where there is a potential stochastic turn. So running from May 2018 through to October the 15th, there are 14 bars where you could get a stochastic turn. Now, I know a lot of you use stochastics. Look at this. If we simply add target recognition, we get rid of almost all of them. And the red lines and the black lines you can see on here are Danielcode ratios of the ranges. And the range runs from July 24th way up to May the 18th, and the half range inside that is the same low, but it's to the high that came in early July. 2 swings, 2 lots of retracements. Look across to the right, you can see that they're in slightly different colors, slightly different columns, I should say, and that's because one of them is from the major swing and the other is from the minor swing. But simply by putting in target recognition as a filter, we've reduced the eligible trades from 14 to 1, 2, 3, 4, 5. Amazing, isn't it? Target recognition is the most important final filter that you can add to your trading if you are trading price. Okay. And of course, exactly the same thing happens on Forex, and we should talk more about Forex. I actually started off as a Forex trader, and so did you, Greg Palladini. I know you were a Forex trader before you made the switch over to futures, but with the movement in the US dollar, it's triggered off some really good trades in Forex. This is one of them, $3,000 straight down without a counter trend. That's a very decent trade. And if you are interested in this stuff, let me know. You should be taking the Danielcode tutorial. It will make you a super trader in Forex and in futures, or whichever your preference is of the two. Some people adamantly don't want to know about Forex. Other people adamantly do. We teach both of it. And give yourself a serious present. And look at what the smart money is saying. Greg Palladini, who's with us today, has been kind enough to let me use his quotes. And we don't advertise, but we do appreciate our students giving some encouragement to future students. And here's what Greg's talked about. You can do that for yourself, and that methodology gives you certainty, confidence, and success in the biggest financial markets in the world. And Greg, of course, is a multiple tutorial graduate, master trader, and a wealth fund manager. And we're delighted to have him with us today. If you're interested in a tutorial, folks, email me today, jneedham@thedanielcode.com, jneedham@thedanielcode.com. And if you are able to start your tutorial before the 29th of this month, that gives you the next 10 days or so, close enough. If you're ready to start your tutorial, I'm happy to discount it by $1,000. And email me, jneedham@thedanielcode.com. If you're one of the first 3 in, the special offer is $6,500. You will save yourself $1,000. Okay, let's talk about correlations. We're talking still largely about gold. Some markets are directionally correlated with other markets. That's a known fact. And they can be direct. In other words, if you've got USD in one side of a Forex trade, whatever the other side is, the other pair, they will tend to move in the same direction. Equities are so highly correlated, Dow, S&P, NASDAQ, Russell, and Germany's DAX. They are so highly correlated directionally that a trade in any one can be executed in any other. In other words, if you see a trade in the S&P and you want to trade the NASDAQ, go for it. Okay, make sure it's elected. So long as a trade is elected, it's entirely valid. I know that lately we've had a little bit of divergence with the equities, Dow looking really strong and Russell looking really weak. So that's the directional correlation. US dollar index and gold are inversely correlated, and they have been for very, very long periods. And what's interesting is when that relationship breaks down, it historically benefits gold. Those of you who've been with us a long time, don't know if you'll even remember this, it's way in the distant past. I suggest it might have been 2008 or 2009. I wrote an article for Financial Sense website. They're on the west coast of the US. And I went back and I examined every single time in history on the data we had available when the correlation between the inverse correlation has broken down. And you can see this correlation dramatically here. Dollar down, gold up, dollar up, gold down, goes on and on and on until it breaks down. And you can see here at the end, it's starting to break down. The next chart will show it to you, I hope, in more detail. Here it is. You can see here the correlation, the inverse correlation that historically these markets run in is dollar up, gold down. Look what's happened here. All of a sudden, dollar's gone up and gold's gone up as well. And gold's gone up in a big way. And this chart also was completed before today's data came in. So it's only showing 13,700. It should be 14,000 something. But you can see, talking about gold, it's the inverse correlation breaking down. Bear that in mind. Not many people know about it. And it doesn't happen very often. But when it does, you're on a big winner. And as far as I can see from my research, when that correlation breaks down, it always favors gold. In other words, gold has a big move, either up or down. It's the beneficiary of the breakdown in the inverse correlation. Very important. A lot of money involved here. Super trade. Here we are. So sometimes the market will make a turn simply because it's market housekeeping. Markets sometimes gap up or down and leave a gap, and markets hate gaps. So we are always trading true highs and true lows. So we have our chart high and our chart low. You know what those are. True highs and true lows are a little bit harder to find. And the rule says if the chart high today is less than the previous day's close, then the true high today is yesterday's close. And the other way, if the chart low today is greater than yesterday's close, then the true low today is yesterday's close. And I hope I have a couple of examples of that. Maybe I don't. But you can see when you look at a chart that's got a gap on it, nobody apart from me seems to know about this from what I can gather. I see people vigorously buying and selling bars straight into a gap, which essentially is an inside bar, isn't it? No, that's what they do. And for you guys who are into day trading, don't forget that all markets use exactly these ratios. This is the S&P on a 59-tick breakout bar for the last 3 days. You can see all the rallies go to the blue lines or the red lines or the black line, and it's stunningly accurate. You're talking about a difference here of less than a point, much less than a point. And that's what the market's been doing. I mean, you can say something simplistic like markets go up to resistance and down to support. And that's true, but what support and resistance are you talking about? If you're not using Danielcode, you might be using Fibonacci numbers or something else that has nothing to do with trading. Unless you've got these Danielcode ratios, you're doing yourself no service. Okay, let's go on. Leo is with us today, and Leo is a tutorial graduate. Glad to have him with us. He's from Eastern Canada, and apart from everything else, he's a very, very good short-term trader. And he was kind enough some time ago to send me these two charts. And this was Leo's day trading, and just highlighting when he found out about the Danielcode ratios, he ran away quickly to slap these on his charts for the next day's trading, and this is what he found. All markets are turning at these ratios. If you don't have them, you've left yourself at a huge disadvantage. Here's his other chart that he sent me, and what he's saying there is it's been just tagging through, can't get through the 50-cent line, and all of a sudden when it breaks through it, it's off and away. Okay, but being off and away, you'll find, look where it stopped right at the top. That was one of the Danielcode ratios up there on the red line. Very important stuff. Do you like that? So if you like any of that, I can teach you how to do it. Danielcode trading tutorial, there's the link. Go ahead and take that link, have a read through. If you would like to be a famous trader, I can make you famous. I can make you as good as you possibly think you can be, and a whole lot better. I've got a very, very interesting guy at the moment doing his tutorial, and you can see his post that he gave me. His name is Chanel Jr. He was a pretty high-level Australian diplomat, involved in Australia's big involvement in Afghanistan. He's now retired, and wants to be a professional trader, and he's loving it, and he can see that these ratios just make everything happen. Look at this for gold. I mean, it just couldn't be more perfect. Yesterday's bar gave you almost perfect target recognition at the close, which was very close to 1968.3, and at the high, which was 1976. And look what's happened today. It's jumped through the next two levels, but look where the close is. It's just inches, ticks, tiny ticks away from 1989. It's just tracking everything so beautifully. I mean, gold is showing us a masterclass in Danielcode trading. Quite wonderful. $14,600 odd per one contract. Gold. That is Harold's favorite investment, and he's really, really into gold in a big way. And gold traders are having a pretty bullish run at the moment. Interesting stuff. So finally, folks, to give you an idea of how your week should have looked, you should have, these are some of the better trades that we've got. You should have got all of them. They were all either TO3, TO3 plus, or blue line trades. Some of them were also 6S trades. Here's the Kiwi. Looked pretty weak, taking out the previous lows there, but it rallied a good bit today. We'll see what happens with that. But it's a nice trade anyway. It's $1,500 for that trade. This is the Russell. It's plus about $1,700. TO3 sell signal right at that 1794 high. Very, very specific. Here is soybeans giving us a nice run, $2,050 odd per one contract into today's close on a TO3 signal. This is UST bonds. It's been a great friend. I know Greg over in Texas will be pulling his hair out. We've been talking about this. I've shown you this whole thing collapsed from its all-time high 2 or 3 years ago, and we've been talking about all the targets I've put on it at various times, saying it'll go there, and they've all been really just standard deviations from the mean. not the normal mathematical way. It's a Danielcode standard deviation, and it's just about the 6th or 7th deviation from the mean. It's extraordinary. This, of course, is the long bond, which we trade, and it was interesting to hear the comment from the Fed governor saying that what's been happening in the long bond, the 30-year bond, has been doing most of the work to rein in inflation. I don't think it's there yet, folks. I think there's more coming. The thing about inflation, it's very sticky. Once it gets in there, it's there. It's very hard to get rid of it. You usually need shock and awe. Previous Fed governor whacked interest rates up to 20% in the middle of a non-notice day. That did the job. But I think they have to do more. If you look at this in context, we were living in New Zealand for quite a while. We went over there to visit my mother's folks. They were both elderly. If one wasn't in hospital, the other one was. And my wife was worrying about them naturally, as she would. So I said, we'll go over there for a while. Have 3 months over there, and you can spend all the time with them you wish. The only proviso being I don't want to live where they're living. I'll find another town. And I went and we found a beautiful house right on the lake at Taupo, which is a sunken volcanic cone. It's a collapsed volcanic cone. Beautiful freshwater lake because it's right underneath the North Island ski fields, of course. It's all snow melt. It is just so clear, and it's got the wonderful trout in it, which, Harold, you'll be happy to know, they were seeded from Reading. They're the same trout you've got in Reading. And they were seeded into many places in the world. And Lake Taupo was one of the few where they really took and they populated the whole country. Wonderful trout, I can tell you. I had the great pleasure of eating some of them. And they're beautiful, beautiful fish. And a beautiful lake. It's the whole of New Zealand. It's a beautiful country, actually. But have a look at this here for talking about T-bonds. You've got this last little leg down, but overall, things are not much tighter than they were. We came back from New Zealand in 2013, and financial conditions were pretty much the same as they are now. So it's not really that there's been any extreme of tightening. All they've done is got it back to the level it was at in 2013 when there was no inflation anyway. And that's why from 2013, interest rates went down, 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 down over the next decade. But we don't have harsh economic conditions. I know if you bought lately, you're in the market, or you bought a house, or you've got obligations, it'll seem like this is the end of the world. And for some of you, it will be. But I suggest that the Fed is going to have to position this a fair bit more aggressively than it has. And of course, it's frightened of spooking the market. It doesn't want to spook the market. It's scared of that. That's what it requires, guys. And you might as well face up to it. And of course, what the Fed does, it's copied everywhere else, including here in Australia and across the ditch in New Zealand. So if you're interested in taking the Danielcode trading tutorial, I'll teach you everything worth knowing about safely and profitably trading futures and Forex. Email me, please, jneedham@thedanielcode.com. Or if you'd like to talk about it, you can Skype me on jneedham2. Office hours, 6:30 p.m. US until late, or 8:30 a.m. Australian Eastern Time. And when you get a chance, I do urge you to go to the chart archives, that link under the Danielcode website. You will see that there are over 40,000 of members' charts that I've created over the years since the Danielcode website went public in late 2007. And as I say, think about target recognition. When you're looking at it, you will be hard-pressed to find a market that has ever turned anywhere without target recognition first. Okay, so I think that's about us for the day, folks. If you haven't already had a free trial, please help yourself. Go to www.thedanielcode.com to start your free trial. Just hit the register button. Any issues, contact Terry at support@thedanielcode.com, and he'll be happy to help you. If you already had a free trial sometime in the past, the computer remembers you and it won't want to give you another one. So in that case, just contact Terry, support@thedanielcode.com, and he'll be happy to make sure you're switched on in all ways. And finally, this is our disclaimer, folks. I do ask you to read it and take it seriously. I suggest you do not trade unless you are really confident that you know what you're doing. It's very, very easy to lose your money trading futures or Forex if you don't know what you're doing. The good news is it's equally really easy to make money once you do know what you're doing. So get yourself trained or untrained. Want to be trained? Give me an email, jneedham@thedanielcode.com, and I will be happy to teach you everything worth knowing. Okay, we just got a couple of notes here to have a look at. Yes, Mick is right. T-bonds due for a counter trend, absolutely is. There was also this is from Greg Palladini. There was also a spot-on time sell signal in bonds on the day of target recognition, and this gave the short trade a high level of confidence. Wonderful. Thank you so much, guys. And thank you all for being with me this evening. And I look forward to speaking to you again at our next webinar, which will be in a fortnight's time. Greg from Texas, his son knows what a fortnight is. Apparently it's not an expression used much in America. It's probably a British expression. It's used very commonly in Australia and New Zealand, and it literally means 14 nights or 2 weeks. So when I say I'll see you in a fortnight, that means I'll be back here with another webinar in 2 weeks' time, and I do hope you'll join me. I hope you've been interested in what we've talked about today. It's very dynamic, and it really does bring things into perspective. There are massive amounts of money being made in trading futures. You just showed you what I've shown you today. Add Forex to it as well. It's a wonderful time to be a trader, and I can make you a trader. Send me an email, jneedham@thedanielcode.com, and we'll get you started as soon as you can. And that's it for me, folks. Enjoy your weekend. We've got a few comments coming in here. Doug, Rolf, I'm glad you enjoyed it. Thank you, mate. And you, stay well, guys, all of you. And I look forward to seeing you at the next webinar. Bye-bye for now.